and indeed negotiation and approval, and indeed implementation of more cargo spaces or more cargo flights. Also the cessation of constraints that were, let's say, constraining exports, particularly flour exports in the main auction in the Netherlands. So you can see those are coming back in place. On remittances, we have numbers for April that was mentioned in the press release, but I think I want to mention it separately. This declined by 9% in April relative to March. But interestingly, remittances from the US, which is our main source, have held steady. And obviously, we expect that the containment measures, lockdown and other measures that have been imposed that were imposed in the advanced economies, would continue to affect or to constrain the transfers or remittances back to Kenya by the diaspora, the Kenyans that are abroad. But I think the point here is that as those economies reopen, we would expect that there will be a return to more normalcy as well in those sectors. Just for you to note, for the year 2020, we are projecting a decline in remittances of 12%, about 12% in US dollar terms. Another point to mention, to flag to you, is that we have been receiving significant official capital inflows. And we have mentioned this in other discussions. For instance, the IMF emergency support, the RCF, we received the equivalent of 730 million US dollars. The World Bank just recently, a week ago, approved support, DPO support. It's in 2 tranches, 750 million US dollars. And also another 250 million, so totaling 1 billion US dollars that was approved and is disbursing. The 750 has been disbursed, and the 250 we expect it shortly. Also last Thursday, the World Bank approved a credit, IDA credit of 43 million US dollars. This is to support the fight against the locusts, and also last Friday, the African Development Bank approved a loan of the euro 188 million. All this to support the government's efforts related to the pandemic. So you can see we have received a lot of or some official capital inflows, which will be supportive of those specific efforts in terms of budgetary support, and also will be supportive in terms of the foreign exchange market. So we will have ample reserves consequently. But I think another element which we need to flag is that the approvals and indeed the disbursements, they are a vote of, is a positive, is an approval of how the economy, meaning in terms of how the economy has been managed, and indeed in terms of the prospects of the economy. So in that sense, they are putting their money where their mouth is, and in a sense, it is a vote of approval. It's a positive vote on how the economy is being managed, and also how the medium-term and long-term prospects of the economy. Bottom line in the external sector is the current account deficit. We project it to remain around 5.8% of GDP, so no change really in this. And reserves, as we said, will remain adequate given all the various explanations I mentioned. There are some things I didn't want to belabor, like the price of oil and things like that, but I think all that is put together, we get the current account deficit that I mentioned. Moving on, I'll say a few things about the banking sector. And I think this has been, the news from the banking sector, I think, are good news in terms of they have remained operational throughout this period. And not just operational, they've been protecting their staff and clients. And this is important because first, banks signal that the economy is working. The economy continues to work. There is a very strong signaling effect from banks remaining open. And at the same time, they have done this protecting their staff and their clients. And as I said before, we had indicated to them some of the measures they needed to put in place so as to protect their staff and also protect their clients. And even as all this is happening, and the various containment measures are in place, they have operated at all places. As a matter of fact, a good example is when there was this sort of lockdown in Eastleigh here in Nairobi, and also Old Town in Mombasa, banks continue to operate. Particularly here in Eastleigh, there are 9 branches, 9 bank branches, and they have continued to operate even in the context of the lockdown. So I think, obviously, with the enhanced measures and all that. So I think the point we are making here is that that is an important signal of the economy remaining operational. Now, in terms of numbers, it's important. It's good to say, well, I would again say that the banks remain resilient. They remain strong. But the numbers indicate that. It's true, NPLs to gross loans have increased to 13.1%, mainly in real estate, trade, and manufacturing. But these loans actually were already on watch on March 1, 2020. So they were already on watch, and in a sense, they kind of moved, they then got classified correctly, meaning these were not things that were current at the beginning of March. Now, they have obviously been hit by various factors before, and maybe the COVID situation has worsened their situation. Secondly, the loans that were performing on March 2nd, there has been a lot of rescheduling that has taken place over the last 6 weeks. And on personal loans, something like 102.5 billion have been restructured. And this is something like 13.1% of the personal and household loans, the portfolio of personal and household loans. Other sectors, there's something like 170 billion that have been restructured. And totaling in all this, you have 273 billion that have been restructured. And this is about almost 9.5% of the total loan book. The total loan book is about 2.8 trillion Kenya shillings. Now, this is only in the first 6 weeks, and we know there has been an acceleration in the current month of May. But I think the point here is, again, we urge those that have been affected by this pandemic to go and visit their banks, have a conversation with your banker and explain to them, maybe bring your pay slip, and also bring the letter that you had, maybe that sent you home, or laid you off, or those letters that actually indicate your specific situation. You do have, for instance, shops that the number of clients have come down dramatically, like malls, as you know, and they too have had that conversation with their bankers, which has helped them also transmit the benefits to their clients, or should we say their tenants. So it is important again to underscore the need to deal with this in a systematic and I would say organized fashion. So those are the important points in terms of the decisions that the MPC made. So as was indicated in the press release, it was clear that the measures that were put in place at the beginning, including obviously the reduction in CRR and all the other measures, was still working, and the reduction in the CBR was still working themselves through the system. And there was going to be the economic stimulus program that is going to be put in place shortly. So on balance, they assessed that the stance of monetary policy was the correct one, and we needed to see those other measures and see what is it that their impact, how is it that they're going to support the economy, and then advise accordingly, or let's say take actions accordingly. In the interim, of course, we will maintain our stance in the watchful gaze on the economy, monitoring developments in all areas. That's all I wanted to say in terms of the specifics, but now I have a few items which may be of interest to you, so I'll just go through them and we'll see whether these are of interest to you. I want to go back to a point I mentioned earlier about the SMEs. And this was one of the points of focus of the economic stimulus program, and wanted to underscore the urgency of dealing with that, and in fact the urgency of putting in place the credit guarantee schemes. And the urgency is clear to us. We are close to some of this sector, some of the operators in this sector, so we understand it. We, in a sense, have a pulse on that part of the economy. And suffices to say that SMEs, MSMEs as well, don't have a lot of let's say, buffers in terms of credit or in terms of other resources that they can use. And therefore, they generally would die quickly. So they are very vulnerable in that sense. And as a matter of fact, there was a survey that was done at the end of April, and that survey indicated that three quarters of SMEs, of the surveyed SMEs, do not have cash beyond 2 months. So that means by end June, these three quarters of SMEs would be, they're on the ropes. They'll be gone because they don't have any cash to keep the lights on, to pay for even, all the things, that supplies, if they have to get supplies, or even to pay for their own workers themselves. So that is how critical the SME issue is. Now, it's not just financing. The SME situation is not just an issue of throwing money at SMEs. It's also an issue, it is finance plus. It's an issue of also providing them with appropriate solutions for their problems. For instance, products, demand for products. Now, it's true, we know some of the SMEs have switched to making the PPEs, the personal protection equipment, the masks and other things like this. But it is important for whatever action is taken place, whatever policy action that is taken place, that will be put in place, to be focused not just on finance, but also on the other side of it, which is the plus side, which is the products and things like that, so that the SMEs can actually produce for particular markets. It's that sort of connection that we want to underscore. So that's the reason for the urgency of the credit guarantee schemes. Because if we don't have one quickly, as I say, the matter is dire and it will only get worse. There won't be a solution and it will get worse. That's one point I wanted to make. On other points, there are some concerns by some of you, I think, about so-called IFRS 9 and how does this relate to what the policies that we, or let's say the measures that we recommended to banks and banks are undertaking in terms of restructuring loans and things like that. I think that is a much more technical issue. And I think it is fine to raise it in technical sort of in a technical way. But I want to make a few points on this. It is true we have looked at this thing. And it is important to understand that, yes, we do not want, what we cannot do is to allow this to become sort of a critical issue that that indicates that there will be significant increase in credit risk of specific borrowers and things like that. So we have, soon after we made our announcement, the BIS, actually sometime in mid-April, did issue its guidance as well, which is completely consistent with ours. And indeed, we are talking to ISPAC. These are the ones that are close to the auditors, so that there is a guidance note on the application of a uniform approach. It is true some of you have been concerned that there may be a haphazard, non-uniform approach, and therefore this is why it is important to work with those particular institutions that are charged with that responsibility, but explaining to them how is it that this would or could or should take place. From our perspective, these are exceptional times. This is highly exceptional and unusual circumstances that we face. And in the circumstances, and it is not the individual borrower's credit risk that has changed. As a matter of fact, providing that temporary relief would, oils during that, let's say, gap period, when the economy reopens, the borrower continues, I mean, if everything is as before, then credit risk wouldn't have been changed, wouldn't have in any way been altered. The point, of course, is that the banks need to assess that well, so that it's clear that they are not penalizing themselves, nor are they penalizing the borrower. So I want to leave it there. I want to make it clear that it is not a mechanical sort of issue. It cannot be done mechanically, as most of you understand. But I think the point here is not to worry about it, because we are working with the various entities and following the general, let's say, approach that other institutions, meaning regulators such as ourselves, are doing in their own jurisdictions. There was a final point, well, maybe 2 points really. There was a final point about innovation, and I think this was raised by Professor Ndemo in an op-ed in today's one of the papers today, and I think I would differ with Professor Ndemo on this one. His concern is about innovation, and he was talking about innovation and CRBs, the credit reference bureaus, that the recently implemented regulations may be stifling innovations. There are other points he made. also in terms of the banks' roles, with the role of the banks with the fintechs and things like that. So I'll just make a couple of points on this. This is a question that is as old as time. The balance between innovation, more generally speaking, and regulation. In a sense, we all know that innovation cannot be allowed to run amok in the economy or anywhere for that matter. Unfettered excesses of market, let's say capitalism, will obviously be will also be detrimental to particular ways. So I think that is clear. Policy is always about that balance, balancing the need and, should we say, the benefits of innovation, and constraining so that you don't have those negative externalities that could come. For instance, we made this point very clearly about the issue of consumers. Consumers need to be protected, and the consumer, should we say, the way the consumer is dealt with is important to us as a society, as a people, and innovation does not get a free license to do that. I think that is clear. But I think also, so that is something we'll continue to work on. We are not going to change that, and we are not the only institution in the world that actually makes it very clear. And we have been in this journey for several years, and it has worked quite well. Secondly, the role of banks. Here, I think, with fintechs, here I think there's an issue as well. Banks are no longer at odds with fintechs. As a matter of fact, over the last couple of years, the banks have been working hand in hand with fintechs. They've been working hand in hand with fintechs, particularly in dealing with those solutions. So I think the point there of thinking that the banks are sort of at war with the fintechs and stopping them is really does not agree with the facts as they are. As a matter of fact, as we know recently, and we've been looking at some of the fintechs closely in the context of our work. For instance, in the context of the African Asian Fintech Festival, we had a whole bunch of fintechs that have been working with us, and we have continued to monitor them during this period of time. And a lot of them have succeeded quite well, even despite the pandemic. There are actually 3 that are quite significant in terms of they did well in our ranking in the hackathon that we had. And these are, for instance, there's one of them known as Quara, which is doing work with SACCOs, very interesting work. Actually, they're expanding, not contracting. There's another one known as Lami, which is also doing insurance in particular ways, digital platforms. Also, they are working hand in hand with other institutions, including banks, and they're expanding, not contracting. So I think the facts are clear, and innovation does not in any way should not be left on its own. There has to be that balance, which we believe as regulators we are at the right place to make that balance. The last point I wanted to make is on Moody's. You do recall a few weeks ago, Moody's did issue a statement about Kenya, and in effect what they did is they revised the rating outlook from balanced to negative, and or stable to negative. But they did not revise the rating itself. They confirmed the rating as it was then. And I think it is important because they did indicate why is it that they had come up with that outcome. And I think from our perspective, yes, we did see that their concern was that there was an increase in let's say demands on the budget, on the fiscal authority, and indeed an increase in debt levels. and in a sense, it was also appreciated that was because of the conjuncture that we had, meaning the pandemic, in the context of the pandemic. By the way, virtually every single country has ended up having, let's say, an increase in budget deficit in this time, because the balance, again, we go back to this issue of balance. Life is about balancing things. So the balance, again, between maintaining a sort of a path, a consolidation path, or working to deal, meaning provide resources to deal with the health crisis, so that it may not become an economic and financial crisis. That balance obviously has to be struck, and I think that they acknowledged that, and that's why the outlook was revised to negative, and they maintained the rate. So I want to stop there. I'm sure you have many other questions, so I'll let you answer the question. I'll listen to the questions and answer them. Thank you very much.
So that was the Governor, Dr. Patrick Njorge, giving...